Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
Hello, everyone. Welcome back to REIMAGINE 2021 version 10. This is our 10th edition anniversary event. So we've been doing this for a whole year now, and we're bringing you the latest news on founders, innovators in the space, as well as the latest news. I'm Roshan Mirajkar. I'll be your host for this event. And I'm super excited to bring you someone who's pretty much been with us since the beginning, many times on the show, always active in the crypto space and kind of pushing the bounds. So with me here today, I have Mark Yusko, who's the founder and CEO at Morgan Creek Capital. Mark, welcome back to the show. And how has the past couple of months been for you as we've kind of rebalanced from a lot of the liquidations and things have been on the uptrend?
Yeah, so great to be back and great to be with you today. And always fun to be part of REIMAGINE and really admire what you guys have put together in the past year. It has been amazing. It feels like a decade sometimes since the first time we sat down and chatted. But the last couple of months have been interesting. That's in probably air quotes. The good news for us is, we've been super busy on the venture capital side. And that's, where we actually spend the bulk of our time at Morgan Creek Digital. We certainly invest in liquid protocols and cryptocurrencies, but by and large, most of what we invest in are the picks and shovels, the infrastructure companies around the ecosystem. And while we own Bitcoin and Ethereum and a few other things in the funds themselves, we view them as venture capital investments, right? We buy and hodl. We don't trade. We don't try to speculate on short-term price. I say all the time, price is a liar, right? The day-to-day price of the Bitcoin network doesn't matter at all. I mean, the fact that people still look at it minute by minute, tick by tick, boggles my mind. All the price of any asset is what two people agree to exchange a small amount of that. I use the example all the time, take Microsoft stock, right? If you own 100 shares and I trade with you, that price we see on NASDAQ, that's the price. But if I had 1 million shares, that's not the price. I would never get that price. If I had 10 million shares or 100 million shares, if I were a big owner like Gates or Ballmer, no chance I get that price. So the price that things trade for in the markets have to do with greed and fear and liquidity or lack thereof. And so that's a long-winded way of saying I've been pretty calm and sanguine about the price movements. I've been talking for a while and people get a little mad at me for talking about this, that perhaps this cycle, right? We're on this 4-year cycle around the halvings, and that this cycle might, and I kept using the word might, have been truncated because everybody was looking at the same model. And when everybody's looking at the same model, when everybody's looking at stock to flow and everybody's focused on the same day or time when BTC was going to hit 100,000, and we all got the laser eyes till 100K and all that garbage. It's easy to front run, and so I think, unfortunately, and whether it was Michael Saylor, whether it was Michael Burry or somebody else, someone got on the other side and triggered just a vast wave of liquidations of leveraged accounts, leverage that had no business being in the system. The amount of leverage. I mean, some leverage is fine, but the amount of leverage that was being used, particularly in some of the Far East markets, was insane, just irresponsible. I actually think it should be regulated away, but crazy. So that happened. Then you had the whole Elon tweet ESG thing, which is just nonsense. The FUD around ESG is, same as it ever was, and stupid 8 years ago, stupid 4 years ago, stupid today. And, I think this too shall pass. We made a nice V bottom here, just under 30,000. Maybe that washed out all of the weak hands and the over leveraged accounts. There's probably still a little bit left. So I don't think we're out of the woods completely, but we have been busy and not really stressing too much. We accumulate on the dips, right? We continue to be buyers of our ownership position in the network. Our goal is a certain percentage ownership of the network. And that would apply to other networks. I mean, we own some Ethereum, we own some other protocols. I'm a pretty big fan of things like Polkadot and Cosmos, and we have a nice position in something called the Graph. So there are other things that we're involved in, but by and large, I think you got to separate the day trading versus the investing, and that's a big challenge in the markets in which we operate.
Yeah, definitely. And a lot of your guys' portfolio companies are doing great and really doing a lot for consumer adoption as well, whether it's through different credit cards or just more exposure to Bitcoin. But while we're on the topic of, I guess, just ownership, how much do you think custody will affect the crypto space as a whole? As more of these hedge funds and institutions look to buy up more of the Bitcoin and just hold it.
That's 100% the gating factor. Look, ever since we started going down this road, as institutional investors and advisors and fiduciaries, we had to make sure that if we were going to ask our clients to participate in these networks, there had to be institutional quality custody. There had to be institutional quality service providers. It couldn't be, two guys and a dog over in Japan, stealing people's crypto, or now the latest one over in Africa. I mean, the idea that people gave crypto keys to kids, literally kids, who posted numbers that when you look at them, they are unbelievable, right? I mean, no one makes the same return every month, month after month. I mean, didn't we learn that with Madoff? But, people gave them a lot of money. So I think we've said since really 2018 that the biggest impediment for institutional adoption was this institutional grade custody, and whether that meant people like Fidelity coming and getting involved, or whether it meant upgrades at some of the other organizations that were early. And we've seen that. And I think you've seen more hedge funds. I love the story John Burbank tells of, he wanted to buy Bitcoin in his hedge fund and Passport back in 2016, 17. And, his general counsel like, no, you can't, right? We're fiduciaries and there's no chance. We couldn't get comfortable of where it's being held. And even if it was in cold storage, but it was just a challenge. And today there are lots and lots of hedge funds and other institutions that are putting it directly on their balance sheets, as well as corporations, as well as high net worth individuals. And so, look, custody and and when I say custody, I mean all forms of custody: self-custody, institutional custody, retail custody. This whole idea of centralized finance, and the maxis will say, "Oh, if not your keys, not your coins." Fine. For someone who's tech savvy, I totally agree with you. But I'm here to tell you, my dad and people like him are never, ever going to hold their keys. Never. It's just not going to happen. So CFI, centralized finance, is going to exist. We've made a bunch of investments in it, so I'm happy about that. But it's going to exist, just like banks, right? I could, if I wanted to, hold all my money, and I would know I have it. Like I have this recurring nightmare, Roshan, where I wake up and I'm at the ATM and I punch in and it says zero. Like, oh my God, how would I prove that it's not zero? I don't have any statements. I don't have any proof. It's their word against mine. They just, oh, I'm sorry, you have no money. And it's like that South Park episode, and it's gone. So I could take all my money out of the bank and I could put it in my house. And then my house could burn down and the money could burn up, or someone could rob my house. Or, by the way, I don't have any money in my house, so don't come rob my house. But I don't, right? And why don't I do it? Because I trust the bank, at least at this point, to hold my fiat assets. Now, I trust people like Coinbase and others and BlockFi to hold my crypto assets. And then, I have some in cold storage myself, but I always say, look, all the Bitcoin in the world fits right here. Now, I don't have all the Bitcoin in the world right here. In fact, I don't have any on my phone because I've been SIM swapped twice. And thankfully, I didn't have it in a wallet where it could have been stolen, but it could have been. And, by the way, if anyone on this watching this video still uses your cell phone number for two-factor authentication, please stop. Please stop. Always use a second email. Never, ever use your phone number. And if you don't know what I'm talking about, Google it. Two-factor authentication. Never, ever, ever use a mobile phone number. So that's a lot of rambling for a simple question, but custody is a really big deal. Hedge funds, by and large, have solved it. They've gotten comfortable. They're here. They're not going away. Trading firms like Susquehanna and Jump, they've been here a long time. They're not going away. Big institutions, the Harvards and the Princetons and the Stanfords and the foundations and the pension funds, they're not here in size. There are a few, but they're not here in size yet, but they're coming. And the reason they're coming is they have gotten to the point of trusting some of the brands that will help them custody their assets. And I think there are more and more people who are figuring out that centralized custody is okay. Look, it's not ideal, right? And if you want to be in a decentralized world, you need decentralized custody. But there will have to be improvements in those products and services just to make it easier, right? I mean, the idea that most people put their seed phrase on a piece of paper, which is flammable and could get, waterlogged or literally you could forget where you put it. That's just a bad structure. And I'm guilty, right? My original seed phrase is on a piece of paper, and one of these days I'll put it on metal and then it'll be a little better. But there's dumb stuff out there that still happens.
Definitely, there's still a lot of work to do, but hopefully a lot of that institutional adoption of custody also will drip down and make it easy for consumers to just purchase it through their existing accounts, right? We've heard a lot of news about maybe Bitcoin being accessible just through your banks receiving more regulatory green light to hold things like stable coins, which I think really will be a vortex, just stable coins in the future. But kind of talking about valuations, when you think of things like Bitcoin and let's say Ethereum or other assets,
yep.
Is it more about like Metcalfe's law for you, kind of the theory about the growth of the network, or yep. Is it about the scarcity element of it?
Yeah, look, it's a great question, right? It's maybe the $64 trillion question. And I think the answer is yes. And I don't mean that to be flippant. I mean that both are important. The Metcalfe's law model is absolutely sound. Networks are valuable because of the participants in the network. Amazon is a network. Apple is a network. Facebook is a network. They're not companies the way we think about companies. They don't control property, plant, and equipment the way the old companies did, right? They're not GE or ExxonMobil. It's not about that. It's about controlling members of the network and getting more connectivity, and exponential growth is why these are the most valuable companies in the world now. I mean, the companies themselves, they're valuable because their networks don't grow linearly. Their expenses grow linearly, but their profits grow exponentially based on this Metcalfe's law formula. And when you think about that, I always use a simple example, right? I take 10 linear steps across the office here, and I get to the other side. If I take 10 exponential steps, I get to high five people in London twice because I go around the world twice. Everybody says, it's not true. I'm like, just do the math. It is true. That's my, my favorite hashtag is math is hard, and exponential math is really, really hard. But Metcalfe's law is real. And for me, the opportunity in Bitcoin or Ethereum or any other liquid protocol is about how big that network gets and how much the Lindy effect takes over. The longer you survive, the longer you will survive. And the law of increasing returns, right? The more people that use something, the more people will use it. And it doesn't mean that there won't be competitors. Or says, oh, what if somebody invents something better than Bitcoin? Sure, but they have to get the network effect. That's the first problem. Second problem, in an open source world, if there's something better, I can just copy paste and put it on the Bitcoin blockchain, and now my Bitcoin blockchain is even better. And we've seen that twice, right, with things like Taproot and I always forget the other one. But when we add features to the network, we can make it better. But one of the beautiful things about particularly the Bitcoin network is it doesn't want to get better. It likes what it is. It doesn't want to be faster. It's very, very secure. It's the most secure computing platform on the planet, bar none. And that has advantages. Now we can build an entire ecosystem on top of it around second layer and third layer protocols and things like Lightning. And that's what's going to happen. And the same way that you and I are conversing now using TCP/IP, because we are using an app that was built on top of TCP/IP to use it, we don't have to improve TCP/IP. It just is what it is. Now, I personally don't understand how it takes my image in real time, chops it up into a gazillion pieces, sends it through the internet, and it shows up and you can see me and I look normal. Maybe not good, but normal. But it's just amazing, right? And so I think the Bitcoin blockchain becomes that same type of operating system. And on top of that, we got Filecoin to do what FTP does, and maybe we got Polkadot and Cosmos to do what HTTP and SMTP do, and then we got Ethereum kind of as the www dot, the toolkit, and there'll be other things that compete. And I don't know if those are going to be the 5 protocols, like we have 5 protocols in the internet, but ultimately, the growth of the network matters. Metcalfe's law wins. Now, conversely, the stock to flow model, very elegant, very simple. For Bitcoin, it works just about perfectly. Why? Because stock to flow really is about commodities. It's about things. And if you think about the things that stock to flow applies to, gold, silver, diamonds, real estate, things where there is some amount of new supply relative to the stock, and the scarcity value, meaning if you think about gold, the amount that is produced every year is roughly equivalent to what's lost or stolen. So the change year to year just isn't that big. So for 5,000 years, gold has been a pretty perfect store of value. Now, Bitcoin is better than gold because I said all the Bitcoin in the world fits right here. All the gold in the world fits in 2 Olympic-sized swimming pools, and it's really heavy and really hard to divide and carry around. And I can send you one 100 millionth of a Bitcoin instantaneously, 1 Satoshi, using code. A lot easier than trying to break a gold bar in half, and I couldn't send it through the internet. So I do think that stock to flow matters. I think the one problem with stock to flow is correlation and causation are different. And the fact that the model worked really nicely in the 2013 cycle and 2017 cycle, it's nice, it's good. But the fact that it's now breaking down in the 2021 cycle, like I said, is that because we had some players come into the market using futures and other derivative instruments that kind of supersede the spot market itself? That's what people talk about gold. They say, oh, gold price has been manipulated for a long time because people can create paper bars of gold. I actually think that's true. And people have been fined, millions of dollars because of it for spoofing gold prices. And so, again, I think it's a long-winded way of saying, I personally look at both models. I think the Metcalfe's law model, and the guy I think who has the best Metcalfe's law model, I mean, I've been following the one that was built, the parabolic trav used in 2014. I don't think he built it, but I can't remember the guy's name who built it. That one has been a little bit aggressive. I like Tim Peterson's from N Squared Cryptos. His a little more sanguine. He has a higher decay rate, I think, or whatever the term is. And so somewhere between those two, which is, we were supposed to be at 100,000 based on the 2014 model, middle of this month. Didn't happen. Tim says we're supposed to be somewhere, around 28, 30,000 as the bottom for end of this year. And you could be 20, 30, 40% higher than that because of, the speculative nature of the price on top of the core value. So I think somewhere in between those two numbers is probably the right number as we hover right around 40 now. I think that's somewhere close to fair value. So again, I do look at both. I do think that the stock to flow, again, I don't think it will be invalidated. I just think it will turn out to be a little bit aggressive in its timing, because I think things, the markets are very different. I would say like the first 6 years of Bitcoin, to me, they almost don't count. Now, I don't mean to diminish the people who bought it early and have become very wealthy because of that. Great for them. But it wasn't tradable. It wasn't liquid. I mean, to meet people in the back alley, no institution was ever going to do that, to do a local Bitcoin transaction. It just wasn't going to happen. In the last 5 years, you could put $6 billion to work 5 years ago. You could put $16 billion to work today. You couldn't put 60, but you could put 16 if you were an institution. So I think as we grow and as we migrate down that curve and become more tradable for the larger pools of capital, maybe the stock to flow will come back in favor. But I admire the work. I don't think there's anything. I think inherently it's beautifully, elegantly correct. I just think maybe the extrapolation from that early data the angle of ascent may have been just a little bit too high.
Yeah, for sure. I think those are all excellent points. And, the data set for something like Bitcoin, it's not like we have, 20 or 30 years plus. However, the interesting part is every single second, or I guess you could say every 10 minutes, the amount of data that's, being added on is awesome. And I also think you're totally right with the valuations. Like it's not the same demographic that's getting involved, and it's not the same regulatory environment, multiple factors. I think in the past month or so, a lot of people have been talking about inflation again. And so one of my questions for you is, if inflation does, come to the point it did when the last financial crisis happened, do you think it will be Bitcoin or stable coins that will sort of save the day, so to speak, like for retail users?
Great question. So a couple things. One, I'm not an inflationista. I'm actually a deflationista. I think what we're going to see is the opposite of inflation. I think this recent bump up in CPI that people are so worried about, 70% of it is used car prices. And that was just an anomaly because of the lockdowns related to COVID. The lockdowns were stupid. The supply chain disruption is real. And, we can't fix it quite yet. And if you've tried to buy a bike or a chip or a storage device or, anything, a computer game, right? It's July, almost August, and I still haven't been able to get my son a PS5. He wanted one for Christmas, couldn't get it, and have been trying ever since. Now I haven't tried that hard. Like I haven't said, I'll pay any price to get one. No, I just want to buy one and I can't buy one. So that supply chain disruption caused that blip in CPI. I think that goes away. It's transitory completely. What I think isn't transitory is the deflationary pressure caused by the killer Ds, bad demographics, every day, 10,000 people in the United States and another 10,000 people in Europe turn 65. 65 to 85-year-old people do not spend a lot of money. They're perfectly nice people, and but they don't spend a lot of money the way 45 to 65-year-old people do, and they're not productive. And again, I don't mean they're not nice people, right? And I'm getting closer to that age all the time. But the reality is, the way we measure productivity, 25 to 45-year-old people, not productive. They're learning their craft. 65 to 85-year-old people, not productive. They're done. 45 to 65-year-old, if you look at the population of any country around the world, if you got lots of 25-year-olds, you have high inflation. Because you have to borrow from your customers in the form of higher prices to train your workers. If you have a lot of 65 to 85-year-old people like Japan, you have low productivity, low growth, low interest rates. Europe, US are on that glide plane, and Japan leads us by 11 and 9 years respectively. And that's just where we're headed. So we're going to have low interest rates. We're going to have devaluation of currencies, and we're going to race to the bottom. Now, all of that is good for any asset that is denominated against those assets. So when people talk about Bitcoin, right? Bitcoin in the last couple of years, it's up, 250%. Kinda. I mean, Bitcoin itself isn't up all that. It's that the dollar went down against it, because if you look at, any asset denominated in dollars, people are excited. Real estate, real estate's going crazy. Well, is it? I mean, the real estate didn't grow. It didn't appreciate. It didn't get better. It actually wore out. It actually is less valuable. It's just that the amount of money you have to spend to buy it, because there's all this exodus of people from California and New York with high prices coming to states like mine with lower prices and bidding whatever it takes to win a prize. The house didn't get more valuable. Or stocks, right? Stocks prices are up at all-time highs, but are they? If you denominate in dollars, they are. But if you denominate in the Fed balance sheet, they're dead flat since 2009. If you denominate in gold, they're dead flat since 1996. No, Mark, that's ridiculous. No, that's just math. Again, if you focus on what drives any price to rise or fall, you have to think about what it's denominated in. Because if I quote you 1 Bitcoin, what's it worth? It's worth 1 Bitcoin, right? It's worth 1 Bitcoin. No, I want to know the price. 1 Bitcoin. Well, I mean the price in dollars. You want the price. Well, the price in dollars fluctuates not just because Bitcoin becomes more scarce or there's more demand than supply. It's because the currency that you're denominating it in goes down. Think about this. In the bear market in 2018, Bitcoin prices fell a lot, right? In dollars. They never went down in Venezuelan, what's the Venezuelan currency? I don't even remember. So why can't I think of their name?
I think it's bolivars.
Bolivars, yeah. So the price of Bitcoin didn't go down in bolivars or Argentinian pesos. Both of those local markets had such high demand for Bitcoins because their currencies weren't devaluing at 5, 8, 10, 15%. They were devaluing at that much every day, thousands of percent a year. So people were desperate to buy those other stores of value. So I'm in the camp that devaluation of the currency is going to continue for a very long time. Interest rates are going to be low for a very long time. Nominal prices of stuff, right, that is scarce, collectible cars, fine wine, art, cool NFTs, all that's going to go crazy. Well-placed houses, apartments. Now, if you happen to be in a place where there's a mass exodus, like San Francisco or New York, good luck selling your house because prices are going to go down. But if you're in a place like Raleigh-Durham, North Carolina, where I live, where Apple's coming, Google's coming, and all the people are leaving. I mean, we had a couple down the hall. A friend of mine is selling his house. Couple from California, sight unseen, moved to North Carolina, right? Had sold their house for like 2.3, bought his for 1.7. He paid $1 million 3 years ago. Didn't negotiate, didn't haggle, done. And that has an impact on the local real estate market. And they don't even work for Google or Apple, who are bringing jobs here. They just wanted to live in a different place than California. So that, again, long-winded way of saying, I think Bitcoin will have a tailwind for a very long time. And that tailwind will come from the erosion of the value of the base currency in which most of the, well, you guys are global. So this is about dollars, right? If you're, if you live in a place that has yen, it'll be a little bit different. If you live in a place with euro, it'll be a little different, maybe a little worse. Yen is probably further along in the path and probably won't have as much downside. If you live in China, actually your currency is going to go the other way. It's going to appreciate. So that'll actually be a headwind to Bitcoin prices, although you're not supposed to hold it there, I guess, right now. So.
Yeah, apparently, and there's been a mass exodus of Bitcoin miners and people in the community leaving that region. I think all of the things that you covered are really, great points. People should really listen to this when you're thinking about the valuation. It's so true. Like even ever since I grew up, everything's been denominated in dollars, obviously, but no one's ever, I think, taught us like the structure of the dollar, who creates it, how it can be manipulated.
Think about this. We've been bamboozled since 1913 to believe that inflation is good for us. Why is inflation good for us? Who decided that? Well, the people at the top decided that. Why? Because the people at the top, if you own an asset, then inflation is awesome. Right? If I own real estate, and particularly if I own levered real estate, inflation makes me richer. If I don't own assets and I have a fixed income, right? If I'm retired and I have a fixed income, or if I'm on a minimum wage job, oh my God, inflation's horrible. And that's why we have the highest wealth and income inequality in the history of mankind. But that was the plan, right? Everybody's like, oh, isn't that unfortunate? Like, no, it's not unfortunate. It's the plan. The guys at the top, and it is guys, it's not just guys. I mean, there are a few gals, but it's mostly guys. They want to use inflation, which is a wealth tax. It is a theft of your and my wealth to give to the elites at the top. And the idea that that is the goal of the Federal Reserve is comical. And the fact that we applaud, a polite golf clap when they try to reach their 2% inflation goal. Make a 2% inflation goal over 30 years steals half your money. Why is that good? It's not. But we've been schnookered, and that's why Bitcoin is opt-out. It's an opt-out function, and it allows us to buy a little, as I call it, schmuck insurance, right? The schmucks are going to steal our money. We're not going to stop them. That's what they do, and they've been doing it for. It's not just not just the governments now, right? Go back to the Roman Empire, the Ottoman Empire, the Mongol. I mean, every empire steals your money, right? And then they eventually fall, and a new empire takes over. And they, so right now we live in the American empire, and we've got American exceptionalism and all that good stuff. But it's on its way down. And I'm not a Weimar Republic hyperinflation guy. I don't think that's how it ends. I think it ends very differently. I think it ends more like Japan, where you just fade away into less relevance, and the others ascend. And that's what happened. That's what's happening in China. That's what's happening with crypto. People are realizing that I can opt out for a portion, not for all of my wealth, but for a portion of my wealth, because I haven't made the decision yet to totally opt out, right? To leave. Like, I like living here. I have to pay my bills in fiat. I have to buy my food in fiat. And that's going to be that way for a long time. And eventually it might be a central bank digital version of fiat, but it's still fiat. But I'm going to have a meaningful and significant portion of my wealth outside that system, in a place that I think is a deflationary currency instead of an inflationary currency.
100%. And I think a lot more, different types of assets, like your identity, your income, all those things, I think it will also abstract to a different layer where, hopefully the Web 2.0 companies are not owning everything you post and different things like that.
Oh, amen. Look, Web 3 is truly extraordinary in its potential. Now, it's a fur piece from here to there, in the sense that in a truly decentralized world, what is a nation state? Right? It has less meaning in a world where there is a currency, where there is a
Are you talking about the metaverse now, Mark?
I'm getting there. And it doesn't have to be fully the metaverse. I'm just at the intersection of the metaverse and the universe, in that if I can have an asset that is money, okay? Gold is the only money in the world. And money is something that has no liability associated with it. There are tons of currencies, the dollar, the yen, the euro, the renminbi. All of those are created by governments through fiat using a liability, debt. That's a currency. That is not money. Money is something that exists and has value without an associated liability. Gold has been that. Now you could say silver or platinum, but basically it's gold. Now, what Bitcoin is and why it is digital gold, it's a digital form of money with no associated liability. Everybody says, well, there's nothing backing it. There's nothing backing any money. Right? I have little green pieces of paper. I actually don't carry anymore. But if I had a green piece of paper here, everyone say, oh, well, that has the full faith and credit of the government. No, it doesn't. If I hand that to the government, do they give me something? Do they give me a piece of a tank? Do they give me a share of their revenues? No. Do they give me gold or silver? No. There is nothing backing that piece of paper. And in fact, if I go to Israel, they use yellow pieces of paper. If I go to China, they use red pieces of paper. They are simply symbols of faith and trust and custom. And custom is why money has value, is you and I agree to exchange it for a good or a service or your time. And that's why Bitcoin has won, I believe, in this transition to the digital form of money. Now, it doesn't mean there won't be other forms of digital money. There will. But the ultimate digital money is the first one. And that's the law of increasing returns. Paul Romer won the Nobel Prize for this. And it wasn't that Bitcoin had to be the one. I say this all the time. The miracle of Bitcoin is not that it went from $10,000 a year ago to $40,000 today. Not even close. The miracle is it went from 0.0003 cents to $1. That is the miracle, because it never should have happened. It should have been squashed. It should have been killed. It should have died. It should have been competed away, but it didn't. Today, the idea that something's going to come and squash that and replace it, very, very hard. And so, not impossible. I actually think it's impossible. But, I think the idea that, Peter Schiff, Keith Klimtu, or Nassim, Taleb, it has zero. It's going to zero. No, it's not. It's just never going to zero. Now, will it go to 400,000 or 500,000 like I think? Maybe, probably, but it's not going to zero. And so getting off zero is critically important for all of us, right? We need to take a portion of our wealth, put it in this asset that is deflationary, that protects us against the central banks, or the central banksters, as I like to call them, because they're going to do what they do best, right? They're gonna slowly boil us like frogs, and we're going to take it. And I ask people all the time, what's the lowest price you remember paying for a gallon of gas? And for someone my age, it's like 30 cents, 31 cents, right? Bought a gallon of gas the other day, it cost me $4.31. It's the same gallon of gas, does the exact same thing. In fact, it's a little less good because now there's ethanol in it. Why does it cost $4.31 instead of 31 cents? Well, it's not that it costs more, it's the dollar's worth less. And so that aha moment for people is where you say, yep, I got to have a portion of my wealth in things, and they can be hard assets, gold, silver, platinum, real estate, things that appreciate art, NFTs. Take the Beeple thing. Now look, full disclosure, and I don't mean him any offense, I'm not a fan of his art. Now, I admire the guy, right? I joke, it's not a joke, I haven't brushed my teeth every day for 13 years. I'm fairly certain that is a true statement. He made a piece of art every day for 13 years. That is awesome. That is mind-boggling. And the fact that he put that together in one thing and sold it, awesome. And he deserves every penny, and it's awesome. Will that be worth $1 billion like the guy who bought it said? I don't know. I'll bet you anything it's worth more than 50 million that the guy paid for it. So things that are truly scarce, that are truly not replicable, that can be preserved digitally in a unique form. Eric Schmidt said that best, said what Satoshi Nakamoto did, whoever he, she, they are, isn't that they created Bitcoin. I mean, that's cool and it's amazing and, world changing. But what's really cool is the technology to create a unique asset in the digital world. That's going to be used by a lot of companies. It's going to create lots and lots and lots of wealth. This is the greatest wealth creation opportunity I'll ever see in my lifetime. Now, you might see something bigger, you'll live longer, but this is big. I mean, it's big, and it's only getting started. That's the other thing. People say, oh, I missed it. Are you kidding me? The national anthem just finished. The game hadn't even really started. So I don't know. I just answered a whole bunch of questions you didn't ask.
No, I love those answers. I think definitely Bitcoin kind of stands for resiliency. And yeah, even in my generation, I always talk about it with my peers. We're probably not going to even be alive for the last Bitcoin block to be mined. So it's amazing. It's going to be a whole century project and even further. And who knows, with people like Elon Musk and Jack Dorsey, someone's bound to take it to space is what I'm hearing. But
I'll take the under on that one. I don't think that's important at all. What matters is the next billion people. And look, to plug Patrick and the project, and it was an honor for me to participate in the Coins project, and this is big, right? Getting the next billion people. That's what matters. And the first 100 million, it's awesome. It's great. Everybody listening to this is, part of that cadre, but the next billion, right? The people like, my cousins and my friends who have been skeptical. My dad at 83, he owns some and it's awesome. But I know plenty of people who don't, and there are plenty of countries that don't, and there are plenty of people in countries that don't. So, but it's coming, and is it going to be used by every single person in the world? I don't know. I can't handicap that. But the next billion, guaranteed the next billion are going to use it. And how fast it happens depends on a lot of things. People like Jack Dorsey and others who are making it easier. So I like to say we, play a small part in that by backing companies, like BlockFi and like Coinbase and like Figure and others. It's going to come out here shortly that we're back in Gemini, which is pretty cool. So really exciting times, really just mind numbing when you stop and think about the transition that's happening, but no less mind numbing than the transition to computers the first time in the 1950s, or to personal computers in the 1980s, or to the internet in the 1990s, or to the mobile net in the 2000s. The idea that we would carry around handheld supercomputers. When this was created and released in 2007, the first iPhone in 2007, stock price of Apple went down because people were like, no one will pay that much money for a phone. Flip phone's fine. What do I need a smartphone for? Yeah, $3. Went from $4 to $3. Today it's $146 split adjusted. Maybe that network's pretty valuable. Maybe the fact that there are 10 billion of these things connected around the world is pretty valuable. So all of that vision and ability to innovate the next big thing, and that's why I talk about the trust net, right? So we had the internet, and that was big, and what it did to media and commerce is pretty profound. And the mobile net accelerated that, right? It's I can buy a plane ticket while I'm sitting in a traffic light. I mean, mind numbing, or order my dinner on the way home, and not when I'm driving, but when I'm in traffic light. And if you think about the next level, which is everything of value, every stock, every bond, every currency, every commodity, every piece of art, every piece of real estate, every private business, everything digitized, trading 24/7, fractional ownership across blockchains. And blockchains are simply a better form of accounting. They're superior to dual entry accounting, which has had a pretty good run for 700 years. And we are on the verge of the next epoch, which is a major epoch. It's the 6th technological epoch in the last 200 years. It's a pretty big deal. And we're not putting that genie back in the bottle, right? This is inevitable. And the thing I love about it It's like Newton said, right? It's not that I'm so brilliant, it's that I stand on the shoulders of giants. He was pretty brilliant, by the way, but he was humble enough to say, no, I have some good ideas, but they're built on the ideas that came before. And everything that's being built today is being built on systems that have exponential growth. That's why I've entered this exponential age that Raoul Pal talks about. And it's hard for the average person to comprehend it because of this whole thing of, look, exponential growth is hard to comprehend. If I say what's 2 times 2, people say 4, right? Pretty easy. If I tell you, so it's 17 times 23, I'll wait. The average person can't do that in their head. They need a calculator. That's actually been proven to be the limit of human intelligence. If I say, how are you at nonlinear regression? How about log normal linear regression? Probably not so good. And yet that is what Metcalfe's law does. And so this idea that we're at the end is silly. The idea that you can stop this trend is silly. The idea that we should look at every tick in the price of these networks is silly. The idea that we shouldn't be stacking sats, okay, is silly. We should. That's why we should use a credit card and don't get, airline miles, get sats. Now, the one thing I would do is I would change the nomenclature from Bitcoin to Satoshis. And that's why my Twitter name now is hashtag 2.1 quadrillion. There are 2.1 quadrillion Satoshis. So 100 million times the 21 million. And a Satoshi would be at a valuation level that people could wrap their head around. Like, people get scared off by a $40,000 price. Remember, you don't have to buy a full Bitcoin, right? You can buy a piece. But the average person just is freaked out by that price. And if it goes to 100,000 or 500,000, they're going to freak out even more. But if we go down to a penny for a Satoshi or a penny and a half for a Satoshi, now I can buy 100 Satoshis or 1,000 Satoshis or 10,000 Satoshis and feel good about it. So I hope that we get to that point. Plus, it'd be a nice way to honor Satoshi for he, she, their, incredible contribution to this. So again, answered a bunch of questions you didn't ask, but I had some fun.
No, I think it's very important for people to get educated on things like Satoshis. And I think a lot of that will also come with improvements in UX and UI, where people can actually see the breakdown. It's definitely easier to understand, like, versus 0.0001. It scares some people, the decimals and cost bias there.
Yep.
But we've been kind of rewinding. We've had you on the show multiple times, even when we were just starting this project, Reimagine, and it was a pleasure having you be a part of the story of coins. It's really about everyone together, what we can do, how we can drive things. But I think when we had you earlier on, none of the things existed as they do now, things like DeFi and NFTs. Is there anything that you've seen like DeFi that has changed your mind about, how that can protect us in the face of all these things for retail and investors, things like inflation and stuff like that?
Look, DeFi is extraordinary. And whether DeFi happens on Ethereum at its root or on Bitcoin as its root, we can debate that, and we can have a discussion another time. There's been a lot of things developed on the Ethereum blockchain around DeFi that are extraordinary. Aave, Compound Maker, synthetics, incredible. I've invested in something called Barnbridge, the bond token, that, look, it could replace derivatives. We could do all of derivatives on chain, which makes sense, right? If you get lost, you don't ask people for directions. You look at Google Maps. You trust code. And so why should I trust Goldman Sachs or JP Morgan is giving me a square deal on a derivative product when I can trust code? Code is better. So I do think it's all going to go to DeFi. Now, whether, again, that is on top of Bitcoin as a base layer and Lightning on top of that and something else on top of that, and then DeFi on top of that, I think that's an interesting argument. I think there's some very compelling people working on some very compelling projects. I happen to like what has already been created in the Ethereum space, and there are those that don't like Ethereum and think it's a Ponzi scheme, and all that. We can agree to disagree, but I don't think you have to love one at the expense of the other, right? I don't think you have to choose amongst your children. I think you can like them all. And I think you can use Bitcoin for what it's good at. And I think you can use the new things that get built on top of Bitcoin. I think you can support those. And I think you can be supportive of what's happening in DeFi. But to your specific question about have I seen anything that I think will protect individuals? Absolutely, right? The idea that you can now borrow and lend peer-to-peer directly on chain, fully transparent, 24/7, borderlessly, and in fractional decimals, fractional units. Awesome. Truly awesome. You don't have to fill out an application, wait to be approved by some big stuffy banker. True story. Went to get my first mortgage, right? Newly married, bought a house, go to get a mortgage. You know, back then, you know, house was relatively cheap. It was $130,000. I want a $100,000 mortgage. And the guy said, well, if you deposit $50,000, we'll loan you $100,000. If I had $50,000, you idiot, I wouldn't need a $100,000 mortgage. I don't have $50,000. So I didn't get it at the bank. I got it from, you know, Countrywide. And it was still a heinous process. I think it took like 2.5 months and it was horrible. But Figure Technologies, one of our portfolio companies, can give you a home equity line of credit, get you approved in 5 minutes using AI, get your money in 5 days on chain. Incredible, right? No paper certificate, you know, no paper application, no 90 days to go back and forth with the bank and prove your income and do this and get references. Nope, 5 minutes, 5 days. And those types of evolutions are profound. They increase trust, right? People trust things that are more transparent and less opaque. They trust things that are more equal, right? Everyone has a chance to prove that they're creditworthy as opposed to hoping the bank says yes in this dark chamber of secrets where they're voting thumbs up or thumbs down because they don't like the way you look. And there was that documentary, right, where they had different couples go in and apply for a loan, and they had straight couples and gay couples, and the gay couples got discriminated against. It's like, are you kidding me? In 2020, that's happening? Yeah, it happened. And so this idea that democratizing access through code is, anyone who thinks that's not extraordinary, just is missing the forest for the trees. It's absolutely extraordinary. So I think there's so many things about decentralized finance that are far superior. Now, do I think centralized finance goes away tomorrow? No way. I said, my dad, 83 years old, 0 chance he's going to DeFi. 0 chance. It's fine. He wants Coinbase to hold his keys. He feels good about that. He trusts them like he trusts the bank. And people say, oh, well, that defeats the whole purpose. For you, young, tech-savvy anarchist, and don't have to be an anarchist, but there are a lot of, you know, libertarian anarchists out there too. You know, it's like why it took so long for this to come around, right? You know, Tim May wrote the Crypto Anarchist Manifesto in 1988. It took 20 years for Bitcoin to come around. Why? Because when you're an anarchist and you sit up in the mountains by yourself with your guns, you don't have any influence. You don't have any friends, right? I mean, you got to embrace society too. And so you can't be all about, you know, libertarian anarchy and screw the man and burn it down. You got to integrate. And we haven't even talked about the metaverse, which is coming, and the idea that, you know, scarce assets created in the digital world are going to be real. You know, it reminds me, one of my favorite stories is how Tim Draper, you know, became a Bitcoin billionaire, right? His friend's son wanted a sword, and the dad said, "You can't have a sword. Your mom's not going to let you have a sword." He's like, "No, not a real sword, Dad. A sword for my game." It's like, "You want me to give you real money to buy a sword in your game? You're out of your mind." And Tim was like, "What? You're going to take money and buy something? Oh, I got to look at this." And he looked at it and he's like, "Oh yeah, virtual currency. Oh, Bitcoin just got seized in Silk Road. All right, I'm going to buy it all." Great buy. So it's those aha moments where you realize that it's not the total replacement. It's the incremental. That's why I call it evolution instead of revolution. It's the evolution of technology, the evolution of systems. It's the evolution. And look, I want to capture as much as I can of the $7 trillion, and trillion is a lot. Remember, 1 trillion is $1 every second for 31,710 years. I want to capture a big portion of that $7 trillion of wasted middleman, middle person, middleman, middle woman, middle person, excess and waste that is enriching the powerful that exists in the current banking system. I want to blow that up. I do. I don't want to blow up the banking system, but I want to blow up that excess wastage, and I want to capture it through companies in DeFi, companies in CeFi. And I think we've done a pretty good job investing in some companies that are doing that.
Yeah, if more things were on chain, it would be more visible, and not to say all the problems would go away, but at least things could be more transparent and we could figure it out. Right now,
sunshine is the best disinfectant in the world. Harder.
And let me get your quick. Let me get your quick thoughts on, right now, this infrastructure bill, everyone's talking about it. What do you think are more, productive ways they could capture something like that rather than just trying to impose more taxes on us?
Yeah. How about we, instead of greasing, the skids of lobbyists and corrupt politicians and corrupt companies that are feeding the lobbyists so they get, pork projects. How about we do this? How about we set up a innovation fund funded by the central government, and like a venture fund, and where the government venture fund would actually own pieces of these innovative companies trying to create the future. Government of Singapore does it. Temasek, they've crushed it, absolutely crushed it. And look, investing in innovation, it's the best thing in the world, right? My pinned tweet: the greatest wealth is created by investing in something you believe in before others even understand. And rather than, throwing money to, buy $400 toilet seats, which is exactly what's going to happen in the infrastructure bill, because people cheat and steal, you'd be much better off investing in businesses that have to prove that they do something good. So don't, put it in pork barrel projects like Solyndra, which doesn't actually have technology that works, but put it in real businesses that are innovating and making things better every day. So the incentive of profits and the incentive of ownership are proven business models. This whole anti-capitalism thing is bogus and stupid. Capitalism works. Cronyism doesn't. And what we have that's wrong is cronyism. Capitalism is awesome.
Yeah, thanks for your quick thoughts there. Hopefully, that sounds like a much more productive way. At least some innovation will come out of it rather than just pointing fingers.
I tell you what, we would get all the potholes filled. We would get all the bridges fixed if we incentivized people to build companies to address those needs rather than feed, we call it lobbying. That's just a fancy word for graft and corruption. At least in other countries around the world, they don't hide it with a fancy word. They just call it corruption.
Yeah, they just label it. And I think these play to earn models have been changing a lot of things like Axie and other blockchain games, around the world. So I'm looking forward to that. And you already answered one of my other questions. I was going to ask you like any interesting stories you have. So I think to end things off, I think you have to give us the Mark Yusko special, which in my view is your advice. You always have some good pieces of advice. So maybe give me 3 pieces of advice, to our viewers out there, people that are watching that are maybe still kind of skeptical, or they're wondering how they can contribute to the space and be a part of this.
Yeah. So, first, spend the time, right? Go down the rabbit hole, read as much as you possibly can on the technology, on the people in the technology. Lop.net has great resources already laid out for you. You can read all the interesting stuff and just spend the time, right? As I said, sunshine is the best disinfectant, but information is power and knowledge is power, and it's all out there. It's all readily accessible and easy to get to, but you got to spend the time. And it's like exercising. It's like eating right. If you don't do it, if you talk about it, it doesn't help. You actually have to do it. So that's one piece of advice. Second, most important thing in investing is to follow the talent, right? People build great stuff. And this is the second time in my career where I've seen a massive exodus of talent leaving lots of industries and coming into one. First time was in the internet, tons of people leaving banking and consulting and finance and manufacturing and everything in between, and going into the internet, and people calling them stupid and crazy, and they changed the world. The same thing's happening now. And I had a guy come, I gave a talk in New York before the lockdown happened. And a guy comes up to me after and says, would you call my mom? I'm like, what? He's like, my mom thinks I'm an idiot because I left a big law firm. I'm working for this crypto company. And you said that's a good thing to do. I was like, yeah, I'll call your mom. So we called his mom and said, your son is really smart. He's working for a great company. It's going to be good. And it was fun, right? Because it's all about talent, right? The world is built on talent. So follow talent. Then the last piece of advice would be what I say every time I go on CNBC and they ask me about Bitcoin. Just buy it, right? Buy it today, buy it tomorrow, buy it next week. Don't buy it all at once. Don't try to market time. Just keep buying it. Right? Zach Prince does this all the time. CEO of BlockFi. He'll actually post pictures where he bought 0.25. He just buys it, right? And what you need to stop doing is worrying about the price of the asset and start worrying about what's your ownership position in the most valuable network on the planet. This is the most valuable network on the planet. It will be the most valuable network on the planet. It will be, I think, the most valuable asset on the planet someday. You need to own a piece of it. You don't need to own the whole thing. You can't, but you need to own a piece. And you just need to keep increasing that piece, and you need to stop looking at it and tuck it in a drawer. I tweeted this out the other day, right? Drawer equals edge. Buy assets that are going to appreciate over time, put them in a drawer, and don't look at them. So that's probably 4 pieces rather than 3, but.
Hey, we'll take more advice than less, and love your ideas of always being on the edge. How can people, get in touch with you and really follow all the happenings of your portfolio companies as well?
Yeah, so I'm easy to find. So I'm on Twitter at @MarkYusko, MarkYusko. Our website is morgancreekcap.com. I stink at email, so never email me. But I actually I'm decent, although some would say not great, but I'm decent at DM on Twitter. I'm actually pretty good at text. So if you eventually track me down and we exchange phone numbers, then that's the easiest way to get me. But I'm pretty accessible. I've written a lot. I've done a lot of podcasts. There's a lot of stuff out there if you're interested in kind of background and history and stories. Watch all the reimagines. That's the easiest way, because we've talked about just about everything under the sun together, and was fun to do it again today.
Yeah, thank you so much, Mark, for being here, always sharing your stories, your advice. We always learn something new from you as well. So I would love to have you on again, as always.
Awesome. Thanks. Enjoy.
And to the rest of you that are still tuned in, we're bringing you more episodes here at Reimagine. And please check out our YouTube library for all of our interviews. We've done over 500 interviews now. So check that out. And thanks for being a part of our community. Take care.